The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. I wanted to start the show today with the chart from Kevin Murphy. He's the gentleman who works with the material that Bill Ehrman worked on. This chart that you're looking at, this graph, was so important to Bryce Gilmore, you know, the really the master of geometry of markets, that he made me send the book to him by fax, and this was back when we had the thermofaxes back in the 80s. But this diagram actually appeared in a book in 1970. It was the same, came out the same time as The Profit Magic of Stock Transaction Timing by James Hurst on cycles. The book was by William Garrett, Torque Analysis of Stock Market Cycles. Both of these gentlemen were engineers. The difference in the two books, one book was $8.95, the other book was $29.95. They were both produced by not Simon and McGraw-Hill, and the problem was the Garrett book only sold 200 copies. I happen to know that because I met Mrs. Garrett several times. She had lived in Hawaii, and we tracked her down to ask her about her husband. And he had a beautiful library that they gave to the University of Hawaii on his death. And a month later, all of the books that they had given the university had disappeared from the library, she told us. So anyway, this is what you're looking at. Bryce was so excited about this because this was the way that you learn how to square a circle for geometry purposes. But let's get on to the markets. We've got one big thing happening in the world. Nobody's talking much about it, and that is Deutsche Bank. Folks, Deutsche Bank is very, very close to a Lehman Brothers type scenario, and it could mean a major, major problem all across the world. This chart's from the IMF showing the different banks and how they are affected by Deutsche Bank. Deutsche Bank is the largest provider of these weapons of mass destructions, and you just have to be very, very careful. The price of Deutsche Bank has been going down quite a bit and had a huge gap down these past few days. And I want to bring that chart up. I know I have it here because I spent. Okay, we'll find it here in a minute. So anyway, I'll get the chart of Deutsche Bank somewhere here in the next hour or so, and we'll see what's going on. Let's just quickly review one of the things that we were watching yesterday. That was in the Treasury bonds. If you'll remember, we were right down at that the 0.61% retracement, and that has held very nicely. That basically completes that Gartley pattern that took 4 days to form. Since that time, we've rallied a little bit over a full point in the bonds. And the problem that we have today and tomorrow, of course, is this is FOMC. The Federal Reserve is meeting, and so Yellen will be speaking probably today and tomorrow, with the big news coming out tomorrow. There's some people think it's going to be up. Some people think it's going to be down. I don't think it's going to make any difference. But if they do raise rates, it might be viewed as a surprise. But I really don't think it makes any difference. I mean, we've been doing this for so long. All we have to do, to look at this is to look at the Fed funds rate, folks. To look what's been happening over the past 36 years. The rates have been going down all the time. So, if they start to go up, where are they going to go up to? There's the $64 question. And I think we're going to go a whole lot higher because it goes back to you want to be concerned on the return of your money, not the return on your money. That's the real key to be watching. That's just my 2 cents worth. Here we are. I want to let you see what's happening with Deutsche Bank here. Took me just a second to find it, but we did find it. You'll notice here we've been in a really strong downtrend for the last 9 months, and this has been going on for years. This is not just this is just recently. As you can see, we made that really nice ABCD pattern in August, made a double bottom there from July and August. We rallied up, not quite to a 61% retracement, but a beautiful ABCD. And then this week, as you can see, we started to gap down, and we're down over 20% in the past 5 trading days in Deutsche Bank. And if you go back to look what happened during the Brexit thing, you'll notice it had a huge break into new. But this thing gets below $11 a share, folks. It's going to break the support at 1.618, as we all know, is very, very important. So below $11 a share, I think this is going to have tapioca written across the headlines of the papers in London, because this is a stock that's got big time problems. And the chart is telling it's that there are big problems out there. Everybody knows it, but like Lehman Brothers, which was the largest bankruptcy we'd ever had, it can still come as a surprise sometime, and people actually don't want to believe it, much like, we have, in fact, I imagine Mr. Logan today will be very excited to hear that the CEO of Wells Fargo is going to be on Congress today trying to explain, what the bank did. Well, I will tell you, all he has to do is plead the Fifth Amendment, say, I regret to say that my attorney says to keep my mouth shut. And that's what I would do if I were him. He should just get in there and apologize. Hey, I had some employees that screwed up. We fired them. Let's move on. Look, Goldman, how much did J.P. Morgan spend in fines last year? $16 billion? Give me a break. I mean, this is nothing. A few $100 million. Then this is not even, and this just gives them something to talk about. But who knows? Anyway, let's move on. We got a possible trade set up that we've been waiting for, boys and girls. I'm going to show it to you. Maybe it works. Maybe it doesn't. The one we looked at yesterday was, the win, and that really had a big break. It broke 4%. In just one day. So that one was doing okay. We'll put this up to let you see it, what it looked like, but it worked all right. We got another one looks real interesting that everybody likes to trade, and I'm going to give you a hint. It is very, very dark in color, and it's very, very slippery. Does anybody want to guess what it is? Okay, boys and girls, it's also used in automobiles, and it used to be used in kerosene lamps. It's crude oil, and we're going to have a really interesting pattern popping up. I'm going to show you the theory behind this pattern when we look at the cattle market for just a second, because this is a very important part of technical analysis, and I'm going to try to build a case of why we should be taking a look at crude oil at this time. As you can see in this cattle market, we had equal moves. If you look at the period between July and August, that was 10 days up. And if you look at the period between September and where we are right now, that's 10 days up. And remember, in 2 days, we are going to have the autumn equinox. That is one of the most important things in astrology, period. And I'll explain why. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I was talking about the cattle market, just trying to show you how technical analysis fits together to form parallel channels and, these Fibonacci numbers and things that come together. But we have a situation, we're very, very close. We're within just not very far away. We're about 80 pips away from a crude oil market that is going to be reaching a absolute beautiful Gartley pattern. I'm going to post it here to let you folks take a look at it here, because just below 4,200, right around the 41.75 level, that's about one handle from where we are right now. We're trading around 42.65, but we will complete an ABCD pattern at 1.27 expansion of the BC swing, and also a 78% retracement from the low that we made back in July. On July 30th. But what's important about this, folks, is it's taken well over 6 weeks to form this pattern. That's a very good sign, because that means that you have a lot of numbers to look at to tell whether these should hold or not. And as you can see by looking at this chart, we've been able to stop at the 78% retracement and the 61% retracement, several different times. So with three numbers coming together, that's an ideal situation to look at. So that number we're watching is right around 41.70 in the that would be November crude oil that you'll be watching now. So sort of keep an eye on that, because if we get to that level, we've got a chance for a pretty good turn. Anything below $41 a barrel would tell us that we're probably heading down to complete the big ABCD that could take you all the way down to 35. So that's the thing that you're looking at. And also we're seeing the same thing in the Canadian dollar too. The Canadian dollar is weakening because oil is weakening, and so that's telling us that this thing is not bottomed as of yet. That's one of the reasons, I was long crude oil on Friday. After looking at it over the weekend, it was just very, very clear that it seemed like it wanted to go down a little bit lower, and that's the key to be watching it. So that's the main thing. I'm going to do something at the break here. We get a lot of people, talking about astrology and whether it works or not. Sometimes it works, sometimes it doesn't. But one of the advantages of being at TFNN, we got a lot of really smart people in there. And one of our friends, I imagine he's from Florida because his handle is Gator, sent me a most incredible YouTube. It's about 30 minutes long, but it shows the zodiac and how it relates to the Fibonacci sequence of numbers. And if you really want to see how some of this stuff fits together, you don't necessarily need it for your trading, but if you want to see how it fits together and that the numbers are not there by accident, and this is why they appear all the time, you really should watch this video. I'm going to post it into the room here in just a little bit at the next break. I'm going to post it. I just have to go in and dig it out. And as you know, this is not the tech capital of the world here in Tucson. It takes me a while to do this stuff, but it's really very, very interesting. I saw it a couple times. It's repetitive in some ways, but it just shows you over and over again how these things fit together. And since we have this equinox coming up here on the 22nd, which is one of the most important because it's mentioned by the Babylonians and the Sumerians, the autumn equinox. And if you ever get a chance to go to central Mexico, just south of Cancun, there's a beautiful Mayan temple called Chichen Itza. It's a temple of the sun, and at the exact time of noon on September 22nd, when the sun is directly over that pyramid, what happens is as the pyramid goes from east to west, not with the pyramid, when the sun goes from east to west, it forms 45-degree angles on the steps of the pyramid. And as the sun moves from east to west, these angles inundate down just like a snake going out into the jungle. It's absolutely, you won't believe it to see. If you get a chance, they show it on YouTube, but it's really amazing, the accuracy, how perfect that was, because it happens every September 22nd. I happened to see it about 20 years ago, and I was just flabbergasted. I didn't think there would be many people there, but there were 250,000 people out there in the jungle, watching this incredible phenomenon. And it's really, really, really amazing. But this video that I'm going to post in here very, very shortly, as a matter of fact, let's see if the old cowboy can pull it up here right now, and we will see if we can do it. I think no, that's not it. Just give me 1 second. I'm very, very close, but not as close as I'd hoped. Okay. I might have to have my good friend Gator send it back to me. Is this it? Yes, this is it. Hold on 1 second. It only takes a second, and then I'll have it ready, and then we'll get back to business at hand, and then we should be, oh, you already posted it. Thanks, Gator. I'll do it again anyway, just to show you that I'm able to do things like that. We'll just put that in here, and there you go. You should watch it, though, folks. It's really, gators are quick, and they're dangerous. Anyway, you should watch this video in your spare time. It's really, really good because it shows how these numbers are all related. And as Einstein said, before God was numbers, and God does indeed geometricize. And you're going to see it in this video and how some of these things come together. And all we're trying to do is to use these numbers, to find a place to buy and sell where we have a halfway decent chance of looking at whether the market's going to be going up or down. Usually when we start the show, every week we start out usually with the German DAX, and we are going to go to that right now. And I just want to let you know that the DAX is not nearly as strong as the S&P. It's barely rallying up to a 38% retracement. of the move that we've had over the last several days. You can see at the bottom there, we had a 78% retracement there on the 16th, which was the lunar eclipse and the full moon. And now we're coming into the equinox here on the 22nd, which will be, that should be a pretty powerful, well, you know, what do you got the FOMC on the 20th and 21st. You don't have to be a rocket scientist to realize that we're going to have probably a whole lot of things happening, you know, in the markets just because of that. Because if they do come out and raise rates, which this is my guess, that they're going to raise rates, and I believe that that will be something that will be, you know, very, very interesting to see if it's happening. A lot of people do not believe that the Federal Reserve is a unbiased organization because, you know, they have to be approved by, you know, Congress and the Senate and stuff. But, you know, they have a job to do, and they are a private bank for bankers. You have to remember that. Even though it's on Pennsylvania Avenue, right down from the White House, it is not a federal building. If you asked 100 people, you would get an answer. About 98% of the people will tell you it's a government organization, and it is not. It's a private bank. And you have to remember that this is an important concept when you're trading. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
back, folks, and we are. Someone's asked a question about what was the exact price that we're looking at on the November crude. That would be right around 41.80. So it's about a dollar a barrel from where we are right now. So keep that in mind to watch that. This would mean the Canadian dollar would go into a little bit lower low, but the problem is that it has to hold. Slightly lower low is fine, but it has to hold that slightly lower low. And the reason for that is there's a correlation of better than 85% between the crude oil and the Canadian dollar. So that's one of the higher. We've shown this chart many times in the room, and I certainly don't want to show it again for one big reason, and that is I have lost it. Let's talk a little bit about one of my favorite subjects, and that is the mental part of trading. It's been a year now since Mark Douglas passed away, and he used to work with me here in my office in Tucson. That's where he wrote the book, Trading in the Zone, and the stuff that he went through, was really amazing. And the things that really are very, very important to me from what, Mark told me, why you have to have a foundation of trust. You have to be able to believe that you are the one that is going to be total control of what you're doing. You have to have, if you're going to do self-discipline, you have to have techniques for staying focused, and you have to have a level of energy that also fits in with your lifestyle. I mean, you don't have to trade 8 hours a day. You can trade just an hour or two a day. Actually, I don't look at the markets more than a few hours. The rest of the time I have my beepers on, to let me know, my alerts are called, and that tells me whether we're going to do that. But in order to be successful, you have to, have an absolute foundation of trust in what you're doing. And the reason you can do this is because you've proven that your trading system has a positive expectation. You don't have to be right 65, 75, 80% of the time, 50-50 or 30-70. One of the best traders that I know, folks, that makes millions of dollars is only right 20% of the time. And what he does is he buys strength in quantity and he sells weakness in quantity. And that's what he does. It's that simple. And but he's only right about 20% of the time. But when he's right, boy, he really rings up the bells. So keep that in mind. You have to have a foundation of trust, because you're going to damage yourself if you don't believe in what you're doing. And damage is where pain and fear come together. And what does that do? It immobilizes you. And then you start seeing distortions. And, you become adverse to pain avoidance. And that's where, if you're watching the monitor, okay, the monitor is your worst enemy. And the reason for that is, if you're long, your mind focuses on the upticks. If you're short, it focuses on the downticks, because your body is programmed to prevent pain. And if you're long and prices are going down, that's pain. Just like if you're in gold right now. Gold's dropped about $4 here early this morning. That's pain if you're long. So looking at the monitor, you can take that pain away by just not watching it. Now, that doesn't mean you can't do some work on the monitor, but if you're in gold, take the gold off your monitor and go look at the euro, or go look at sugar, or go look at cattle or crude oil, something that could be happening that your mind is going to be working on that, as opposed to thinking about the position that you're on. Folks, I can promise you one thing with 100% certainty, that nobody gives a hoot whether you're long or short. That much I can promise you. There's no question about that, in my mind. And there's a big paradox in trading. You have to be flexible and rigid at the same time. You have to be, rigid in your rules, but flexible on the things that you're focusing on. So that's important, because, a rule is not etched in stone. It's just to be polished if you find something a little bit better that needs to be, improved by a little bit. So do the right thing. When you're trading, most of the time, you're going to be okay. And when you're in doubt in something, You shouldn't be in it. And believe me, not having a position is a position because you have the patience to wait for something that looks like it's going to be happening. Now, I posted a chart in here on silver, and as you can see, it was stronger than gold. It's now since weakening up, but gold looks to me, and I don't know if this is going to be the case or not, but we've still got a chart of 1275. Now, we're only $40 away now in gold because we're trading at 13.16 right now, so we could easily, with the Federal Reserve coming in here today and tomorrow, we could easily see a spike down there at that point. Now I'm going to be most probably having an order setting there. We'll have to use about a $15 stop because it's going to be wilder than a March hare, and that's a rabbit that's in the middle of the typhoon season in central Mexico. But you've got to be really careful here because anything below 1275 in the gold would tell us that we're most probably getting better. We're probably going to go a lot lower. Remember, these markets stopped exactly where they should have on the long-term basis, 6 weeks ago when we hit 1384 in the gold and 21 in the silver. But they backed off, quite a bit. But this is what they should be doing. We're making big ABCD pattern in gold. We've showed this many times. 1315 is where we are now, but we want to look at it around 1275. Is what we're really going to do. Remember, when you're doing self-discipline, it's a mental technique that you have to focus, and you don't get it overnight. You have to do it in steps. Just like if you teach a child how to ride a bicycle, the child doesn't get on the bicycle and just take off. They have to fall down and get up and fall down and get up, and pretty soon they have a big smile on their face and they're riding all over. They're bleeding from their elbows and their shins, but it doesn't make any difference because they're very happy that they're able to ride the bike. So this is the same thing when you're using self-discipline, when we're trading, is if you don't protect yourself, no one else is going to do it for you. You got to be able to do that, and that's the main thing that you want to do is to try to do that. So keep in mind, we're trying to do the best we can, and that's about all we can do, but you have to do it in baby steps, little by little. And that's where sometimes you need someone to kick yourself in the keister, to do the right thing, because you don't always act the way you should act because you get involved with watching the monitor too much, listening, to other people. Raise your hand, Larry. You could be responsible for that one. But even then, when you're doing this, I always try to tell the people, hey, this is my opinion. Use it if you want, but you're the one that has to take the final responsibility for these trades. That's the main thing. That's really what you want to do. It's really you have to be able to do that no matter what. Remember, the fears that we have in the market are the things that really scare us. The fear of being wrong, the fear of losing money, the fear of missing out, the fear of leaving money on the table. Like every one of these, we have these in our psychic, and that's nothing more than anything else. One of the things is the fear of missing out. Folks, it's much better to be out of a market wishing you were in. It's much better to be out of a market wishing you were in than in a market wishing you were out. Sorry, Gator, I didn't mean to get into your head, but there's a lot of space in there, buddy, so we'll have some room. 877-927-6648.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal
principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and I was asked to post a chart for gold on a short-term basis, so I picked a 30-minute chart. It's one of the ones I like to look at, and as you can see over the past several days, we're making a Gartley pattern here in the gold at this 1314 level. That's a 61% retracement of the low we made several days ago. It's also a nice ABCD pattern, and when you have both of those together, that defines what the Gartley pattern is. So there should be strong support at around, this is short-term support, of course, at 1314 to 1312 in the gold. At that particular point, you know, since you're on a 30-minute chart, you'd be looking at a risk of around $4 an ounce. If you're trading a daily chart, of course, you've got to increase your parameter out to about $8 an ounce. If you line up a really good spot to to try to buy or sell something. Like if you buy gold at $12.75 this week, I think that a $10 stop, $8 to $10 stop would probably be enough. It's probably going to be very, very wild during that time. So keep in mind that it's going to be quite interesting. Now, the crude oil, we are still quite a ways away. We're a little less than $1 a barrel away from crude oil, but because the Federal Reserve is in here today and tomorrow, we're probably going to see some spikes in some of these things. So if you want my permission to stand aside during that time, you certainly can. I personally would not like to put any new positions on until we get the final. I don't think it's going to mean a lot, but the problem is it's the perception of what you think is going to happen. That's the main thing, and that's the real thing that you have to keep in mind. It's the perception of what these people are thinking the market is going to do, because everybody's got an opinion. Today it was Hank Paulson was on, the old CEO from Goldman Sachs, who was our Secretary of the Treasury during the too big to fail. Unfortunately, he felt that Lehman Brothers was okay to fail, but the rest of the banks held up okay. Someone's asked a question of whether I think Deutsche Bank is going to make it or not. Folks, I really don't know. All I know, it's the largest bank in Europe. It's the flagship of Germany, and the stock is in big trouble. It's gapping down, and it's not a good sign. And below $11 a share, that's what happened to Lehman Brothers. If you remember, the week before Lehman Brothers finally went tapioca, I believe it was trading at 18 or so, and it opened at, I believe, 16 on one of those days, and that was it. And I don't think the ECB will let Deutsche Bank go down, but it could go down like AIG did. If you remember, AIG went from 72 3/4 to 53 cents a share. And sure, it's rallied because they split it 20 to 1, reverse split 20 to 1, but that stock's still $2 or $3. So it's it's $3. That's exactly what it is. So it's still a very, very touchy situation over there, and you're seeing it in the DAX because the DAX is not rallying at all. Well, we're not rallying much either. We had a high of 2194 a few weeks ago, and we're only trading at 2140 and change today. So this market is not rallying very much, and so it's going to be interesting. Whether politics plays into this, which it usually does, into the market, because if you remember, when President Obama got elected, the market was going straight down into the election into 2008. Perfect setup for change, and that's exactly what happened. And he promised us change, and we have to suggest that he certainly did keep his promise, as things certainly have changed. Okay, let's take a look at. We've holding up all right here so far. The S&P is trading around 2137. It's up about 4. The Dow's up about 66. So just like yesterday, it opens a little bit higher and then fights all day to try to stay up into this area. We'll see if it's going to continue. But the main ones to watch from a perspective today are the Canadian dollar and the oil, because they're very, very close. At gold, you could say that also the gold has got a chance to hold the 13, 14 level, but don't risk anything below 1309. Below 1309 would suggest that you're most probably heading down, towards lower levels. Now, whatever the Federal Reserve does, it's going to be related to this next chart, folks. I can promise you this, and this is the U.S. dollar index. And we'll see here that, we're in a very, very tight triangle in this dollar index. Anything below 98 is very, very bullish. Anything below 94 is not too bullish. And we got a question here in the den. Fire the question. I don't even know. Oh, the British pound. I think the buy on the British pound, Mr. Z, is, I believe, at 127.50. That's the long-term chart that we posted in here several times, the long-term weekly. That goes back to, I believe, 15 years ago, and there's an ABCD structure coming in at the British pound at that level. Remember, the old level that we hit was 128 and change, so a slightly lower low than that level at that 127.50 level would be very, 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 very interesting, from that point of view. Another question someone's asked is about the corn. The corn was a good buy at 327 a bushel. We rallied up about 11 cents from that level. If you're in the corn, put your stop at break even. Because there's not much else you can do. It's up about $500 from where we bought it, but it could still go back down again, and you don't want to risk it, because if you risk $500 on corn and it moves $500, now your risk is $1,000. The $500 that you originally risked, and plus the $500 that you made, that's your money. That's on your equity run. That's what it shows. That belongs to you. So you got to protect yourself, and remember what Mark Douglas always said. This is a business of making money. It's not a business of being right or wrong. And you have to be able to enjoy the fruits of your labor and pay yourself for the business that you're in. So when you see a chance to take profit, and this is where your judgment will come in, and as you get more trading experience, your judgment will be better, but you'll be able to book some of those profits and enjoy, the fruits of your labor, because you don't always buy at the low and sell at the high. That's only available to God, and she doesn't trade anymore. So only one or two people ever get the high or low tick. We got a call from Florida, and we're going to be coming into a break. Bill, are you there?
I am, Larry. Good morning.
Good morning. As soon as the music comes, we'll take a break, but what can I help you with?
On that dollar chart, if you look back to the left of the chart, it's about a year ago, September, October, summer. That looks to me to be a perfect butterfly pattern. Am I correct on that?
It absolutely was. It was a perfect butterfly pattern, and the dollar index follows the patterns that we use. Really beautiful. Anything that trades actively, but this one is so big that it's really got a big move coming, no matter what direction it comes out of this level, either 98 or 94. But the key is, back in July, Bill, you'll notice that we hit those 5 ratios there and had a big sell-off. And whenever you have 5 ratios coming at the same price, boy, that's a time when you really focus on that, because there's a lot of things happening at that point. And as you can see, it did turn down.
Larry, I wish I could see that butterfly pattern clearly. What a perfect pattern to trade, and look at what you could have done there. Just a quick comment on Deutsche Bank.
Stay with us, Bill. We got to take a break, and we'll be right back with you. Hold on, please.
Sure.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking to Bill from Jupiter, Florida. And Bill, you were telling us about the U.S. dollar index and the butterfly pattern?
I was, Larry. What a perfect setup, and that's so visual and easy to comprehend. I just wish we could see patterns like that, more frequently, which I think you do, but that's on a much larger time frame and took up a lot longer to unfold. But what a beautiful pattern. That is just a classic example.
It sure is. One thing we got to keep in mind, though, Bill, they don't work all the time.
No, understood, Larry. But, as you say, you're putting the probabilities in your favor, and that certainly, how would you hesitate on a trade like that? The probability was there, and obviously that trade worked out very well had you entered at the extension point.
We had the same thing occur in Wynn and also in Apple on Monday morning on the opening, and both of those stocks, broke quite a bit. Now, they don't always work, but when they do work, it gives you a nice, warm, fuzzy feeling anyway. So if you see 5 ratios coming together, boy, set your watch on that one, because you don't see that very often. Usually you'll see 3. Many times you'll see 2, but when you see 5, that's telling you that many cycles are coming together. And if that thing should fail, like if the dollar index gets above that 98 level, well, that's extreme sign of strength. And that means you could really see a move in the dollar, and going below 94, you're going to see a big move to the downside. And with the Fed in here today and tomorrow, Bill, keep your hands in your pockets until they're done talking, my friend.
Now, when Congress is in session, Larry, hide your money, protect your capital. Now, I hear you. If you
ever get called in front of Congress, Bill, just plead the Fifth Amendment. It works for everybody.
Well, that would be in keeping with the tradition that we seem to be seeing here lately. Larry, quick comment on Deutsche Bank. So obviously they're in trouble because of not just, selling derivatives or trading derivatives, but these are exotic derivatives with terrible leverage.
Amen, Bill. Thanks for bringing that to our attention. We got to go, buddy. Thanks for calling in. Appreciate it.
Thanks, Larry.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.